Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I'm going to take a look at several stocks that should hold up or would be good to buy on any pullback in the market. And the reason that I'm doing this video or have this subject is because if we look at the SPYs right here, we can see they're coming right up to the 50-day moving average, also bumping up against a swing high. So it would be natural to expect some volatility in here, maybe even a pullback to some degree. And if that happens, I got a list of stocks for you that actually could be good, whether the market goes up from here or they're definitely ones to focus on if the market pulls back. So before we get into this, I just want to make sure that if you're just finding us on YouTube, please subscribe to our channel, and also know that you can find more videos just like this at marketgauge.com/tutorials. And we also put out trading ideas and other information on two different Twitter feeds, at MarketGauge and at Market Minute. So follow us there too. Finally, make sure you're watching this video in HD, and you can do that by changing your settings in the lower right hand corner. All right, so as I began, markets have pulled up or rallied from their lows. In the case of the SPYs, looks like a little bit of a double bottom here. We're now challenging this, which is a 50-day moving average. This is the 200-day moving average. So we're in a bearish phase, and for that reason, amongst others, it would be natural to expect that we'd get a little bit of a pullback after what was one of the biggest moves up we've seen in a while over the course of a little over a week. And we have the SPYs right by the 50-day moving average. Qs aren't quite there yet, and they haven't even begun to really challenge their swing high. And the same could be said for IWMs. Dow, which has gotten through that swing high over here on the left, is also being held back, at least today, by that 50-day moving average. So here's what I thought I would do in this video. First, let's take a look at which sectors might be a good place to look for a defensive as well as offensive play. And what do I mean by that? Well, if we take a look at which sectors are actually in a more bullish phase than the overall market, so the market's in a bearish phase, which means the 50-day moving average is under the 200 and the price is under both. So with the market in a bearish phase, the XLPs have held up really well, and these are actually in a bullish phase. In fact, they're up 5% over the last 3 months versus the SPYs, which are down 5%. They're up 2% over 6 months. SPYs are down 7%, and year-to-date, same story, beating the SPY. So the XLPs have really held up pretty well. And we can find that on any given day here at the resource section of Market Gauge. If you click on or mouse over resources, then go to little big view, you'll wind up here in little big view, and then you'll want to go to sector summary. That's how I got here. All right, so now that we know that XLPs is an interesting place to look, you can go buy the XLPs outright. They would be a place that I would look if the markets pull back. Also, if we look at the chart, you'll see that they're pretty close to a breakout. If they break out, that would be an opportunity too. But I'm going to take it one step further here, and I'm going to take a look at some stocks in the XLP. So one of the easiest way to do that is just pull up Yahoo, go to Yahoo Finance, select the XLP, and then click on Holdings. All right, and you'll get the top 10 holdings. And when you have a ETF where you've got some substantial percentages, this is especially important. So substantial percentage in this case would be like Procter & Gamble, over 10%, Coke, 9%, even Philip Morris at 7%. So that's a pretty substantial part of the ETF right there. 12 and 9 gives you 21, and 7 round that up to 8. You're almost up to 30% of the ETF in these 3 stocks. So let's just go through several of these and see if any of these happen to be good candidates to look at either for right now or if the market pulls back. So I'm going to look at it in a view in which has our triple play indicators on it. And I'm going to start with PG, Procter & Gamble. Now, before I get into the individual stock itself, let's just quickly review what these two indicators are. So the top indicator here is a price leadership line. In other words, I want my stocks to be stocks that are stronger than the overall market. They have their own trend to them regardless. And an example of this is you can see I have the cash S&P 500 index down here, and I have it there for comparison. So you can see that since, let's say, the beginning of December 2015, the SPYs had a pretty significant downtrend. But Procter & Gamble kind of weathered that storm really nicely and is now over its, here's its 50-day, here's its 200-day, and basing or consolidating nicely all during the time when the SPYs have really had a rough go of it, and they're actually in an opposite situation. They're in a bearish phase, and Procter & Gamble is in a bullish phase. Right? So this indicator is one that kind of tracks that for you. So if the blue line is over the red line, that's what we want to see. That's a stock that's got a strong trend. And oftentimes, as we see here, if you're in a strong trend, you're allowed to pull back to the red line, kind of like a retracement. That's the kind of action we want to see. Now, the bottom one, or the middle one, I should say, is not price, but volume. And we read it the same way. So the way we read this one is we want to see volume, or I should say the blue line of volume over the red line of volume. That tells you that there's more accumulation in the name or in the stock. Now, right now in the markets, it's hard to find stocks that have good accumulation patterns. The volume on this recent rally up has been very meager. So if you're looking at our triple play indicators and you can find stocks that have good volume accumulation, that's one to keep an eye on. So what we're looking for here for stocks, again, beginning with the XLP as a starting point, what stocks if they were to pull back? So if the market, let's go to the market for a second. So if the SPYs pull back to say, and I would say a reasonable level for the SPYs to pull back to would be right down just above the 1850 level. I'm sure a lot of traders wouldn't like to see that happen, but lining it up with these lows here, and kind of the top of this support area, that puts you right down into the 1850. Traders aren't going to like it, but if you're prepared for it, you could have stocks like the ones I'm going to show you that could still look good. And if you've got triple play, you'll also know if they still look good on the triple play indicator, which essentially is showing you how strong the stock is regardless of what the market's doing. So Procter & Gamble, as I said, many of these have two potential plays. Procter & Gamble has a good looking consolidation, so if it were to break out, if the market were to continue higher and Procter & Gamble breaks out, this thing is going to be a really good looking breakout on the triple play because it's got volume, and hopefully at that point the price leadership line will also be breaking out. Additionally, if Procter & Gamble pulls back down to the 80 level, the low of this pullback, it will also be right on top of the 50, and that would be a great time to again be looking for a potential entry point with a stop below the 50. That of course assumes the market doesn't completely fall apart, it's just pulling back and full of volatility. So there's an opportunity where you could buy it on a dip or buy it on a breakout. Next one, Coke. Now you can see based on what we just said about the triple play, Coke looks great in terms of its accumulation. Not only that, its accumulation value is already really breaking out. That's what we like to see. The price has been in a nice strong trend. Price leadership has been in a strong trend. It's holding the red line. So a breakout here of Coke actually looks pretty good here today. Certainly would be confirmed and look even better if it takes out yesterday's high. But considering the fact that the overall markets are down today and Coke is up, this is what I'm talking about. This stock's got its own momentum, and if it breaks out, it's going to look great. And just like Procter & Gamble, you could put a trend line in there. If Coke pulls back down to these support levels, even if it pulls back to this 50-day moving average, the magenta line, this would be one to keep an eye on when the market pulls back. Next one, Philip Morris. All right, Philip Morris, you notice a pattern here. Philip Morris broke out nicely here, broke out with good volume, broke out with good price leadership. The breakout has worked nicely, but if the market starts to pull back substantially, there's a good chance that Philip Morris could be pulled right back down to this green line, which is a 10-day moving average, and the support and the area where it broke out from. So Philip Morris isn't one that I would chase higher here, but certainly it's one that I would look to entertain an entry point if it gets back down into the 90.5, 90 price range on top of this support. And of course, I'd want to see that the volume pattern here is still intact. So those are three that really look solid if the market pulls back. And two of them, as I said, you might keep an eye on if they continue higher. Now let me just give you an example of ones that look a little shakier. Walmart has looked good. But ever since in here, you can see that it started fighting with this 200-day moving average. Then the volume broke down. Now the price is broken down. So Walmart, I keep an eye on it, but it's got to get up through the 200. And if you don't have triple play, you won't really know whether or not these have confirmed. If they don't confirm, that's a bit dangerous. And we've got better stuff. Flip side is if market pulls back, this isn't really one that I'd want to entertain, primarily because we've got better stuff, and when a market rallies like this up to resistance level and it's triple play or negative, those are the ones that really can really unravel if they start to come undone. All right. In contrast, take a look at Pepsi. All right, so Pepsi consolidating right over its 50-day moving average, and it's not what I wanted to do. If I blow this up so you can see the big picture on Pepsi, look, these aren't going to go to the moon quickly, but if you're looking for nice, solid, trending stocks that could really turn it up and move over the next several weeks, this breakout here of this substantial consolidation, I mean, that's a full year of consolidation. So a move up here really could get some legs, assuming that the market doesn't completely fall apart. But if the market pulls back, like I've been saying with the other ones, this is one you could look to see what happens when it gets down near the 50-day moving average. All right, now those were all staples. One of the things that's a little concerning about this market is some of the stocks that have been leading or were leading before got hit pretty hard in the beginning of the year. Now they've rallied back up. Some of them at a really important inflection points. I'm going to show you one, Amazon. Now I like Amazon. I'd like to see the company do well. But look at the significance of this 550 level. All right, here's the 550 level. So you've got this low here, you got all these highs in here. It's basically where it launched from when it went up to its recent high, bounced off it, and then after earnings here and with the weakness in the market, it has penetrated the 200 and now back over the 200, or did it just correct to the 200? Well, we're at a key inflection point here. So if you like Amazon, this is a good low risk point to get in. And I say low risk because if Amazon's good, it really should not come down through this low below the this about 540 level, below the 200-day. If it continues higher, we're going to want to see the price leadership pick up a little and the volume leadership pick up a little. Here's an example, though, like I said before with Walmart, if this comes back through 540, with these looking weak, this could really come apart and these lows down here probably wouldn't take too long to get hit. All right, so that's the value of being able to look at whether or not the stock is just kind of being pulled up with the market, or is it doing something significant on its own. Amazon kind of just getting pulled up with the market. Volume is, while it's moving up overall, looks like it could easily be just a retracement here. So keep an eye on Amazon. Yesterday's price action is a good kind of pivot point if you want really tight risk. But unfortunately, I don't have time to go look at Apple and Facebook and Google, but there's some really interesting patterns in those as well. I will, however, be doing a webinar this Thursday night. Keep your eyes open for it, in which we will look at Google and Apple and Facebook and see what the leading stocks are doing on the triple play indicators. So hope that helps, and I'll see you in the next video.